All right, these are your real estate numbers for March of 2025, which really covers the end of February. And if you're looking to buy a home or sell a home, it's important that you're asking yourself the right questions. And a good way to know what those questions are to ask is what the data says. Because ultimately, we're like trying to figure out, is now the good time to sell and is now the good time to buy? Hey, everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And we're going to take a look at the answer to that question. We're going to look at what is the trend right now as far as housing prices and what's likely to happen between now and 2025. So let's take a quick look at the numbers because this ultimately is dictating the market. And there's really two key numbers. One, inventory. Is that going up or down? Well, from the beginning of the year, we're up 44.5%. So I guess that answers that question. We are up huge from the beginning of the year. If we look at month over month, we are up even from last month to this month to the end of February, 6.1%. Now let's look at the median price from last year at this time, 377,000 to 385 to month over month, still up from 375 to 385. We've really been pegged at this median price right around 380 or so for a while. And then the big number, months of supply, we're at 6.76%. That is up 71% since the beginning of the year. And even since last month, we are down 12.6%, but we are still running in 6 to 7 months of inventory, which we have not done in a long time, meaning inventory has been on its way up. And if you read all the stats, is going to continue up. So is that going to cause a big market correction? And the answer is you'll have to keep listening. So a couple other things here is we're going to look at distressed home sales, only 23, so hardly any distressed home sales. It's really not a major part of our market. And then just a quick breakdown of the numbers here. So in this shows that rates have been steadily staying in the 6.75% range. We'll look at that in a minute. But right now there's 12,411 homes on the market. The most there's been for a long while. 8,467 of that are single family homes. 2,486 are condos. 1,485 are townhomes. Pending home sales though on their way up because we're headed into the selling season. Sales closed on their way up, and average days on the market been right around this 70 days here for a while, which is about 2 to 3 months to sell your house. So we have the makings of a softer market for sure, right? We have 6 months of inventory. We have median price pretty much staying the same, and months of supply going up, days on market going up. So what's likely to happen? The answer to that question is going to be rates. We had rates at 8% not that long ago, with say 2 years ago, and the prices held steady. And why? Because we have so many people locked into really, really low mortgages. I was doing a big event this week in Oviedo. So many people came up and said, we would love to sell, but we got a 3% rate, 4% rate. And those people are what we call locked in, right? They're not going to sell their house, even if they need to, because they just have too low of a payment to justify it. And that's really shrinking inventory. So even though there's been less demand, less people that want to buy with higher payments, still kept prices about fairly steady. Now when we look at rates, we have dropped. So we are at 6.7%. And when I say dropped, you can see kind of the cycle high this year, really at 7.5%. Not that long ago, really at the end of, I'd say this year, end of in the last 12 months. That was about a year ago. We've been really hanging out around this 7%. So what happened is we really were pricing in more rate cuts. Some inflation numbers came in. Some things that we're worried about. This was before the election. Rates shot back up. And then now we've kind of settled back in this 6.75% range as far as interest rates go. So what about prices? This is a home price analysis of 25,000 zip codes. I thought this was really cool the way they did this. So they broke this down kind of by area in the United States, Northeast, Southeast, kind of looking at different areas. And anything in the blue is showing a home price increase over the last 12 months. And this, no surprise, almost everywhere is mainly blue. So when we get down here to Florida, we get into these yellow colors, meaning it's more neutral, but still not a lot of red. So let's zoom into Florida and kind of see what's going on here zip code by zip code. And let's zoom in a little bit more and a little bit more, see how my geography is here. And so obviously places where have been affected by the hurricane, You got -6, -7, -8 at different places. So 6 to 8% over the last year. What about here in Orlando? So we look here, Oviedo, up 1.5%. We look at, this is more Oviedo, 0.6. Orlando, -0.4. Another Orlando, -0.1. Another part of Orlando, Orange County, 0.1. Basically to say 0.1, -0.4, +0.4, flat. Meaning there has not been any major price depreciation really through all of Central Florida. Now, if you're looking for a house, you may say, wait a minute, there's all these houses on the market. But when you start shopping, let's say in Oviedo, once a house is priced right, it is going very quickly, often with multiple offers. So sellers can't get wish pricing, meaning if I come out and I'm a real estate agent and I'm like, your house is worth 400, you list it for 425, it's going to be crickets. As soon as you get to that 400 price point, you're going to get activity. So really sellers being forced to really keep their price points in check with what the market is, and buyers getting better deals than they've gotten a long time. Not major discounts on prices, which hardly make a difference anyways, but getting sellers to pay closing costs and a lot of things that they haven't been. And with the prediction, which we'll see if it comes true with the current administration trying to push rates lower. If we end up with lower rates this year, that's going to push more demand. It's going to push more people in the market. A lot of these home buyer incentives are going to go away because the best home buyer incentive, if you're a buyer, is a motivated seller, which we have a lot right now. So we're going to keep watching. If we get to 9, 10, 11, 12 months of inventory during the Great Recession, we were at 25, you are going to see some price deterioration. Is that going to happen? No one can say for sure, but if I was betting, and I work with a lot of real estate, rates are going to fall. That's going to pull demand into the market, and we are going to see this inventory slowly trickle down. Is it going to go down to 2-3 months of inventory again? I don't think so. I think we're going to be bouncing around in this 4 to 7 months of inventory throughout the year. We shall see. We'll keep tracking it. If you're a seller wondering, hey, I want to get some more information on my house or refinancing, reach out to me. If you're a buyer, there's so many programs out there, reach out to me for that. As more information becomes available that moves the market, as always, I'm going to cover it right here. Have a great month. This is Rayce Robinson, your favorite Florida mortgage broker. I'll talk to you soon.